Hello guys, today we will be talking about the probability of a market crash soon. Let's start by understanding the history of the crash. After economic liberalization in India in 1991 and 1992, the stock market saw a number of cycles of booms and busts, some related to scams such as those engineered by players such as Harshit Mehta and Ketan Parekh, some due to global events. On 20th April 1992, the BSE experienced a fall of 12.77%. On 17th May 2004, the BSE fell 15.52% due to the election win by Indian National Congress. During the financial crisis of 2007-8, the stock markets in India fell on several occasions. The BSE had seen a fall of 26% over the past 11 months in 2016, losing 1,607 points in 4 consecutive days of February. The reasons given for this included NPAs of Indian banks, global weaknesses, and global factors. On 28 February 2020, Sensex lost 1,448 points due to growing global tension caused by coronavirus. Both BSE and NSE fell for the entire 5 days of the week, ending with the most weekly fall since 2009, as coronavirus led lockdowns across the world triggered fears of recession. These are now the lowest levels since 2016. It's witnessing the biggest weekly loss since October 2008 as increasing number of coronavirus cases in India as well as globally. The causes of these crashes were excessive leverage. When things are going well, leverage can seem like an excellent tool. For example, if I buy $5,000 worth of stock and it rises by 20%, I made $1,000. But if I borrow an additional $5,000 and bought $10,000 worth of the same stock, I'd make $2,000, doubling my profit. Rising interest rates are a negative catalyst for stock and economy in general. From an economic standpoint, higher interest rates means higher borrowing costs, which tends to slow down purchasing activity, which can in turn cause stocks to die. Political risks. While nobody has a crystal ball that can predict the future, market like stability and wars and political risk represent the exact opposite. Panic. It's important to point out that crashes aren't generally caused by one or more of these factors all by themselves. It's typically a combination of negative catalysts and investor panic that causes a sharp dive in the stock market. For example, the steepest market drop during the financial crisis occurred during September and October 2008. Yes, it was the real estate speculation and excessive leverage that led to the trouble, but fears that the US banking system could potentially collapse sent investors into a panic, which led to the actual crash. Now, should we expect another market crash? Let's pen down the reasons for the possibility. A second wave of illness. Regardless of where we stand, the current lack of vaccine means that there is at least a chance of countries being hit with a second wave of illness. Health officials and organizations around the world are warning of an impending second wave. Stimulus packages are temporary. In the US and India and many other countries, governments have provided stimulus packages for business and additional unemployment benefits for individuals. This cash injection might be partly responsible for the slight recovery of the stock market that we've seen in recent weeks. However, this was a temporary boost. Once this money runs out, business and individuals will struggle again to pay mortgages, rent, and will limit the spending, possibly leading to another rapid drop in stocks. Irreversible damage to small businesses. Despite government help, many small businesses are struggling to keep afloat and many others have already been forced to cut down on staffing or close down entirely. A continued decrease in small business activity will cause unemployment levels to remain elevated, negatively impacting the economy. Continued fear and uncertainty. It's important to keep in mind that often overlooked influences like panic and fear can fuel an economic downturn as effectively as any other factors. With the public health emergency still a largely unknown entity to healthcare professionals and public alike, it's difficult to make informed decisions about anything, including investing. So, these were the reasons why the analysts believe there can be a second market crash soon. Tell us your views in the comment section below. Thanks for watching the video. Do like, share, and subscribe for more such content.